Assalamualaikum, my name is Muhamad Farhan. I will begin our presentation with Sime Darby background. Okay, Sime Darby Berhad is a Malaysian investment holding company in which engaged in 4 core businesses, which is industrial, healthcare, motors, and logistic business. In addition, Sime Darby also engaged in another segment such as retail and insurance. Sime Darby operate for over in 19 countries in order to continue to deliver sustainable value to the Malaysian economies through operational excellence, high performance standards, and good corporate governance. Sime Darby, which was founded in 1910 by Alexander Guthrie, Danial Harrison, Smith Harrison, Joseph Crossfield, William Middleton Sime, Henry D. Esther Darby, and Herbert Milford Darby. Currently, Sime Darby headquarters are located at Petaling Jaya, Malaysia.
Hi, my name is Muhamad Alif Danial. Now I will explain about the SWOT analysis for Sime Darby Berhad. Okay, first, strength. What is strength? Strength are the firm capabilities and resources that it can use to design, develop, and sustain competitive advantage in the marketplace. First, Sime Darby's strength is that it offers a diverse and comprehensive variety of goods and services in countries, primarily in Asia Pacific. Sime Darby business operation activities have been carried out by over 1,943 employees. In reality, this has immediately improved Sime Darby's marketing position in a competitive market. Sime Darby had a global reach with a large number of existing enterprise and corporations. Second, geographical diversification. Sime Darby has a diversified portfolio across different sectors and geographies, giving them the unique ability to leverage on an established network to broaden their earning base. Third, strong financial performance. Their strong financial position and low gearing allow them to capitalize on growth opportunities to enhance shareholder value. Fourth, leading partnership with premium brands. Sime Darby are the partner of choice for some of the world leading brands, giving their customer access to a network of a world-class product and services. Okay, next, Sime Darby weaknesses. The Sime Darby weaknesses might be either a lack of strength or a lack of resources for talent that the organization now lacks. Leader must be certain if the weakness exists due to a lack of strategic preparation or as a result of strategic choice. First, Sime Darby has experienced few cases of the law claim which eventually affect the brand image. For example, the former senior general manager of Sime Darby Engineering, Sime Berhad, has involved in a legal claim and finally has been jailed for 37 years due to the corruption. Indeed, this legal claim considered as a bad news to the Sime Darby, and thus, this will definitely reduce the confidence of the investors and the consumers, as well as the share price of Sime Darby will be decreased. Second, poor road infrastructure which might reduce the quality of the product and increase the cost of the production. In fact, the poor condition of the estate road of Sime Darby plantation causes the inconveniences to the workers as there are a lot of transport problems and it should be improved immediately. Okay, now let's move to the opportunities. Opportunities are potential areas of growth, earning, and market share identified by the corporate chain. Sime Darby has numerous options to expand their business. Sime Darby Berhad, for example, acquired Salman Earth Moving Holding property in 2021, a significant provider of rental and maintenance service in Australia, serving the civil construction, agriculture, and mining sectors. As a result of this acquisition, Sime Darby will be able to expand its market in the civil construction industry, as well as into the New South Wales region. Second, Sime Darby Motors Malaysia has opened the Sime Darby Motor City, NRM 570 million automotive facility. It is also billed as the largest automobile complex in Southeast Asia, and it houses several of Malaysia and Southeast Asia's largest flagship dealerships such as BMW, Ford, and Hyundai. Threats. Threats are variables that can bring risk to a company's business model as a result of change in macroeconomic conditions and consumer attitudes. First, the impact of COVID-19. According to Sime Darby's annual report 2020, COVID-19 had a significant impact on their business. When the Malaysian government enforced MCO 1.0, the company was only permitted to employ half of its employees, resulting in a decrease in output volume. Furthermore, many countries have implemented further closure to prevent the COVID-19 from spreading. As a result, Sime Darby revenues in 2020 has decreased. Second, there are numerous competitors in the connected industries and markets. There are numerous competitors offering comparable goods and services, with some even offering comparable quality and pricing. As a result, Sime Darby faces the risk of losing consumers as well as corporate revenue. Hamid Group, for example, is one of Sime Darby's competitors.
Okay, for the next part is vertical analysis for SOPL. For the first one is operating expenses. There is a slight fluctuation during the three consecutive years, 2019, 2020 and 2021, which is 96.63%, 96.66% and lastly 96.44%. This indicates that Sime Darby Berhad are maintaining their operating expenses to an acceptable level even the COVID-19 outbreak hit globally, in which caused some of the businesses to shut down. Okay, for the second part is operating profit. There's a growth from 4.10% to 4.87% from 2020 until 2021. This was influenced by the decrease in operating expenses, in which led to the contribution growth of the income in the current year 2020. Okay, lastly is for the profit for the financial year. In 2019 until 2020, there's a decrease in profit for the year, but be able to rise up the profit in year 2021 from 2.39% until 3.44%. This shows that during the last 3 years, Sime Darby has overcome their business problem during the pandemic and economic downturn in 2019 to the diversification and advanced planning that provide consistent revenue stream and strong cash flow that increase the profit in 2021. Okay, for the next part is vertical analysis for statement of financial position. First one is property, plant and equipment. There is a continuous drop of PPE from 2019 until 2021 with the percentage of 22.44%, 22 and 10%, and 21.85%. This happened because Sime Darby focuses on the activities on the acquisition of large company during the last 3 years rather than invested in property, plant and equipment. Other factors including the restriction of government that prevents Sime Darby from doing invested activities. Second part is payable and other liabilities, current liabilities. From the year 2020 to 2021, there's the increase of this short-term debt from 36.40% to 43.22%. This indicates that Sime Darby need immediate fund to cover their expenses to maintain its sustainability in business during the COVID-19 outbreak. The lastly is the borrowing, which I want to discuss, which is during the 3 consecutive years, 2019, 2020 and 2019, 2020 and 2021. It showed the decreasing in trend from 23.05% to 11.89%. This indicates The data indicates that Sime Darby does not involve too much in borrowing activities, since they increase profit from the current respective period, as well as aggressive sales strategy that implemented by the Sime Darby Berhad. That's all from me. Thank you.
Hi, Assalamualaikum. My name is Aiman bin Muhammad Azhar. So now I'm going to discuss about the liquidity ratio analysis. For the first ratio is the current ratio. In 2019, the ratio is 1.57. Then it slightly decreased to 1.52 for 2020 and slightly increased to 1.63 in 2021. So in summary, Sime Darby Berhad was considered as lower risk as all the current ratio for 3 years are more than 1, which shows that they could liquidate their current assets more easily to pay down their current liabilities. The next ratio is the quick ratio. Sime Darby Berhad's quick ratio for 2019 is 0.62. For 2020 and 2021, the quick ratio shows there was a slight decrease in 2020, 0.6, and a slight increase in 2021, 0.71. In summary, the company has better sufficient quick assets to cover its current liabilities in 2021 compared to the 2019 and 2021. Yet, the company is still considered as having a high financial risk due to its quick ratio for all 3 years being less than 1. Next, we are discussing about activity ratio analysis, or also known as efficiency ratio. For the first ratio is receivable turnover ratio. For 2019, the receivable turnover ratio is 12.79 times. Then it increased slightly to 14.35 times in 2020 and 17.42 times in 2021. In summary, the receivable turnover ratio for Sime Darby Berhad shows a positive trend from 2019 to 2021, which also indicates that the company's collection of accounts receivable is becoming frequent and efficient. Next, average collection period. For 2019, the average collection period is 29 days. The period decreased slightly to 25 days in 2020 and 21 days in 2021. In summary, the average collection period of Sime Darby Berhad is becoming efficient from 2019 to 2021 as the companies managed to averagely collect its account receivable more frequently approaching the year 2021. Next ratio is inventory turnover ratio. Sime Darby Berhad's 2019 ratio is 3.87. Then the ratio slightly decreased to 3.61 times in 2020 and slightly increased in 2021 to 4.44 times. In summary, the company is most efficiently managing its inventory in 2021 as it had the highest inventory turnover ratio among these 3 years. And then we move to the average age of inventory. Sime Darby Berhad needs 94 days on average in 2019 to convert its inventory to sales. It increased to 101 days in 2020 and managed to decrease to 82 days in 2021. In summary, the company is more efficient at selling its inventory in 2021, while less efficient at selling its inventory in 2020 among these 3 years. Next, we moving on to the payable turnover ratio. In 2019, Sime Darby Berhad pays its account payable at a rate of 10.43 times per year. Then in 2020 and 2021, it increased significantly to 10.78 times and 12.55 times respectively. In summary, the payable turnover ratio from 2019 to 2021 shows an increasing trend, which indicates that the company is paying off their creditors more frequently towards 2021, while reflecting their better working capital management too. Lastly, is about average payment period. The average payment period for Sime Darby Berhad for the accounting year 2019 is 35 days. The average payment period continues to decrease to 34 days in 2020 and 29 days in 2021. In summary, the declining trend from 2019 to 2021 is encouraging for the company, since it indicates that they are paying their suppliers promptly and without delay, while also indicating that they are not taking full advantage of the credit terms allowed by their suppliers.
Assalamualaikum warahmatullahi wabarakatuh. My name is Asyraff bin Muhamad Jeffry. So I will continue with the presentation of our company, which is Sime Darby Berhad. So I will talk about the solvency analysis, and the first part, which is the leverage ratio. It consists of debt equity ratio, time and interest earned, and equity multiplier. So for the debt equity ratio in 2019, for every RM of Sime Darby owned by the shareholder, Sime Darby owes RM 1.12 to the creditors, which means that for every RM of the shareholder, Sime Darby need to pay 1.12 to the creditor, and these numbers increase by a small amount in 2020 and 2021, which are at 1.28 and 1.13 respectively. So even the ratio is increased, it's still at a recommended ratio, which is below than the industry average, which is 4.13. Therefore, Sime Darby has a safe debt to equity ratio to protect their business if there are any unexpected event in the business decline. So next, debt ratio. The debt ratio by Sime Darby for these 3 years at 2019, 2020 and 2021 are lower than the industry average, which is at 0.81. This shows that the company has a good management at their debts with the creditors. Next, for the time interest earned, Sime Darby shows a very high number for the time interest earned ratio, which indicates that the business could fulfill their interest obligation without any problems. Even though there was a decline in 2020, it is still higher than the industry average. By having a high number of this ratio, give the company the ability of meeting their obligation towards their investor without risking their business performance. And then last one for the leverage ratio, which is the equity multiplier. The number for this ratio shows that Sime Darby does not really rely their assets on their shareholders, which is good for a company because they has less reliance on debt to finance their asset. Sime Darby has a lower equity multiplier compared to the industry average, which means the company carry less financial leverage.
Next, we will go to the profitability analysis. As for the profitability analysis, we will look into the net profit margin, return on investment, return on equity, and DuPont return on asset. The first one is net profit margin. Net profit margin is also known as a return on sales. The return of Sime Darby Berhad have decreased by 0.4% due to the significant impairment, which offset its one-off gains. This impairment has reduced the operating profit in 2020. Sime Darby Berhad also recorded one-off deferred tax credit in previous years. Besides that, since most of Sime Darby revenue come from outside Malaysia, it has increased the foreign income tax and resulted of lower net profit in 2020. In 2021, Sime Darby Berhad managed to increase its return on sale by 0.93%. This is due to the great performance by motor division, especially in China. Besides that, Sime Darby Berhad also recorded a gain on the disposal of its interest in Tesco and Eastern and Oriental Berhad, which is part of ongoing exercise to dispose the non-core asset. Next, we will go to the return on investment. For return on investment, it was the lowest in 2020, which only 7.3%. This shows that Sime Darby Berhad not able to fully utilize its invested capital in 2020. Compared to 2019, Sime Darby Berhad has limited comparability because of the adoption of FAR670, which is lease, resulted of increase of investment capital that cannot be fully utilized. In 2021, Sime Darby Berhad managed to increase its return on investment by 11.1% because of the higher profit generated. This shows that Sime Darby Berhad have utilized efficiently its capital. Other than that, Sime Darby Berhad also have improved its management of invested capital in 2021. Next, we will go to the return on equity. For return on equity, we will looking on both return on total equity and return on common equity. In 2020, both shows a reduction from 6.5% to 5.5% and 6.6% to 5.7% respectively due to lower profit. This shows that Sime Darby Berhad unable to efficiently use the fund from the shareholder and capital to generate the profit. In 2021, due to the growth in the operation of Sime Darby Berhad, both returns have improved significantly to 9.2% and 9.6% respectively. This improvement indicates that Sime Darby Berhad had efficiently used its capital to generate more profit. Lastly, we will look into the DuPont return on asset. As for DuPont return on asset, it separates return on asset into net profit margin and total asset turnover. Return on asset in 2020 have decreased because of the decrease of the net profit margin and total asset turnover. This shows that Sime Darby Berhad have used its asset inefficiently in order to generate sales in 2020 with only 3.11% of return on asset. As for 2021, Sime Darby Berhad able to utilize its asset efficiently. This have resulted of increase in net profit margin and total asset turnover into 3.15% and 1.61 times respectively. This have increased return on asset to 5.07% for the years. That's all from me. I will pass to the next presenter.
Okay, so I will continue with the market strength and overall evaluation. So first, I will talk about the earning per share, which is EPS. Sime Darby shows that they earn 0.209 ringgit Malaysia, 0.121 and 0.139 per share unit in 2021, 2020 and 2019 respectively. It shows an increased trend compared to the year before in 2021, which shows that the benefits for the company are increasing and it gives also more attraction to the investor. So next, I will talk about the price earning ratio, which is PE ratio. The price earning ratio decreased in 2021 compared to 2020 and 2029. This shows that Sime Darby have dropped their performance in 2021. Next, I will talk about the dividend yield from 2019 to 2021. It shows that an increasing trend along these 3 years, which shows that the company has increased their dividend for their shareholder or the share price has decreased. Next, the dividend per share. Sime Darby has been paying dividend amounted at 0.15 in the year of 2021 and 0.10 for both 2020 and 2019 to their shareholders. Sime Darby has increased their dividend amount by 0.05 in the year of 2021, which shows that their business is in a good performance. And the last one is the dividend payout ratio. Sime Darby has distributed 71.77%, 82.64%, and 71.94% for the year of 2021, 2020, and 2019 respectively of its net income as dividend payment. The company only retained the remaining percentage of those dividend payout ratio that I mentioned before for the operating needs of the business. Thank you.
To summarize, financial and non-financial analysis are critical for every firm in order to express financial strength and present a rapid image of a firm's financial health and underlying work. We use a variety of ratios in this project, including liquidity and profitability ratios. These ratios play critical function in an organization, particularly one that provides items to consumers. All of these ratios have their own interpretation, and businesses can use them to improve their performance by referring to them. Sime Darby Berhad has succeeded successfully in the last 3 years, despite the fact that COVID-19 had a significant influence on them. According to their statement of profit and loss for 2020, their profit has decreased. However, by 2021, they have overcome this challenge with their recovery strategy, and their profit has increased. As a result, it is critical for every firm to have a recovery strategy in place in order to get back on track and maintain a positive image in the future. In future, we believe that Sime Darby will continue to grow, delivering sustainable value to their stakeholders through operational excellence, high performance standards, and good corporate governance.